Okay, so excuse me. Post-trade analysis. So after the breakout, and I just wanted to point out that the best way I traded this would have been to put in a buy order at the 50% Fibonacci retracement and to take profit at the 61 or 100 Fibonacci extension. So this was an ABC retracement where the chart broke out from there. You can see a divergence in the chart where we make a lower low on the chart in the price, and on the stochastics below in the indicator window there is a low, higher low. Then that's the 4-hour chart. And on the hourly chart, same thing on the divergence, low, lower low. And then on the stochastics, there's a low, higher low. Looking at the daily, you can see that the indicator had pulled back, but price had not really drastically dropped much. Everything's sloping higher. Moving on to the weekly, you can see that the MACD average line is still sloping up, even though the stochastics had started to point down, looking almost like it had crossed the %D line. But after the breakout on the 4-hour and the 1-hour, it backed up off of the %D. %K backed off the %D line. So if this was going to drop, it would have taken more time, because the monthly chart is still pointed up and we still have time within the month. So that would have been an indicator that the weekly chart was still bullish, even though it looked like it was beginning to turn down. So once the daily chart pulled back with price mostly holding at the level, we could have been looking to go long. Everything was pointing to go long. There's even a higher high on the MACD average. You can see here it's making a high, and then up here it makes a higher high. There's no divergence. So everything was pointing to a buy. And then, of course, as I said earlier, we had the bullish divergence on the 4-hour and on the 1-hour. So that was the entry. And that's all. Hope you benefited out of this. And I'll talk to you next time. Bye.